One, and we're live.
Yep.
Hey, welcome, Greg. What's going on?
Hey, Dave. Appreciate you having me on.
Well, I was just talking to you before we started about the fact that because of the time change, we're meeting at a kind of a late time here. So I'm slightly sort of whisperish because there's a guy upstairs that gets mad if I make too much noise. So you'll forgive me if I whisper a little bit. My people were telling me, they like the soothing new voice I was using before. So maybe it'll be better for the channel.
All right, good.
So there is a time change between us because you are in Utah. Is that correct?
Yeah, near Salt Lake City.
And you've been in the business for quite a while, as I understand it. And you were mentioning something when I first talked to you. We don't know each other super well, but I did get a chance to have a conversation with you a couple weeks ago. Just give me a little background as to how you ended up in the trading business. I know you as somebody who teaches trading and who has a YouTube live stream daily. But how did you get to this spot? You were mentioning something about having a different business that you sold at some point or something like that.
Yeah, it's kind of an interesting story. When I was in college, I was a triathlete. I was a professional triathlete for several years.
Oh, wow.
And I had this idea about putting basically some caffeine into a gum because it helped me with my racing and training. And so I had this idea and I just kind of followed it up. And a couple years later, I had this chewing gum company, and it was an energy gum. It was called Buzz Gum. I don't know if you remember. It was a long time ago, but then we got into vitamin gums and diet gums and all sorts of different chewing gums. And then we were working on a cold and flu gum, and we actually ended up developing the product called Zicam, which is a pretty famous product now for colds. You put it up your nose. Anyway,
oh, wow.
Eventually the company that I started went public, and it did very well. And then I sold it. I got out of it completely, and I was fairly young. And I thought, boy, I wonder what I'm going to do. And a friend of mine was fooling around with some trading stuff. I said, hey, that looks pretty interesting. And so I started out with the trading, and I did quite well at first, although I had no clue what I was doing. Then the 2000s came, and I lost a whole bunch of money, and I thought, man, do I want to keep doing this? What I realized is I just realized that I didn't know what I was doing. And so I spent, basically the next 20 years after that, just studying and learning and hiring mentors and teachers, all over the place. And so that's how I got into trading. Yeah, I sold my chewing gum company. I almost quit. I was very close to quitting trading, but about 20 years ago. But I'm glad I didn't and stuck through it. And so now I just basically...
Information contained in this video is for educational purposes only. Everybody's financial situation is different, so some strategies covered in this video may not be appropriate for you. Trading in leverage products is risky and should only make up a small part of an overall investment strategy. To become a better trader, you need to take personal responsibility for any trading losses. Views of people being interviewed are not necessarily endorsed by this channel. We try to present many opposing views and let you decide. David is not a licensed financial advisor and is not trying to sell you anything. So sit back, relax, and enjoy the show.
Try to teach people the same thing that I've learned over the last 24 years.
So you were in school, and what were you planning to do when you were in school? Were you planning to be an athlete full time?
No. When I was in school, I was studying marketing. But right in my last year of college is when I started up the chewing gum company, and it just kind of took off. Actually, I had a marketing class, and my professor said we needed to, start a fake company as one of our class things. And I said, well, listen, I just started this gum company. Can I do it for real with this one? And she said, yeah, it's great. So yeah, it was interesting to be in the chewing gum business.
I find it interesting that you had that sort of entrepreneurial spirit from such a young age. You have a gift that I kind of became aware of from talking to you, and that you have a very engaging personality, and I'm sure it served you well through time. I find like I start talking to you, and pretty soon I find that you've like switched the conversation to talking about me, and you're a very good listener. So I think that's probably served you well with meeting people. I noticed you have some really good social skills. It's fascinating.
Boy, that's nice to hear. No one's ever told me that before, Dave.
Yeah, and I guess I've heard that little story about your where you you started in a business and then you lost money. I think that you kind of make that pitch sometimes when you talk about your classes on your channel, sort of giving a little background on yourself.
Yeah.
So is that is that a big part of what you do now, is teaching people about trading?
Yeah, well, so I have the YouTube channel, and it's in the last hour of the trading day. And basically what I do for an hour is I talk about, the possible trades that I'm going to make for the day. And I kind of teach people, what I'm thinking. And I go down through my watch list and I get some candidates. And then what I try to do by the end of the day is just whittle it down and whittle it down and whittle it down to probably like just the very best technical setup, and then place that trade at the end of the day because I'm an end of day trader. And then after the market closes, I answer any questions that people have and try to clarify. But yeah, we talk about a lot of stuff after the market closes, but mainly that first hour, I'm just trading and explaining and teaching. And so, I do teach private lessons, and I really do enjoy that. But there's nothing in the private lessons that I teach that I don't teach in the live stream. The only difference is during the live stream, we don't have as much time, and there's 40, 50 people in there, whereas when I teach one-on-one, it's just one, it's one-to-one.
One of the thing that when I found you that actually was interesting to me is you were talking about a trade, and I don't know if you talk about this a lot, but at this day you were talking about this trade that I found interesting, which was the trade where you go long.
Yeah.
Overnight, the overnight long.
The overnight spy trade.
Can you talk about that for a second? That trade.
Yeah,
I think it's interesting, and I think you really can't argue with the back testing on that one.
Yeah, it's I talk about it every day. I've been
really? Okay.
I talk about it every single day. I take the trade every single day. I've been using it since February 26th of 2019. 2019 was a stellar year for it. This year's been horrible. But, a little bit about the overnight SPY trade is what I do is I buy the SPY right at the close of the market. I hold it overnight. I take the overnight risk, and I sell it first thing the next morning. And when you look at the back testing, it's phenomenal. This back test was done from 1993, and they test two approaches. And the first approach is buying the SPY in the morning, holding it through the day, selling it at the close. And the second approach is buying it at the close, holding it overnight, selling it first thing in the morning. Let me get the real numbers for you so I have something real to talk about here.
Sure.
Anyway, so here we go. This is from Liz Ann Saunders. This is her post on Twitter, at Bespoke Invest on Twitter. But the two approaches since 1993. First one's buying the SPY at the open, holding it through the day, selling it at the close. If you did that every single day since 1993, you've actually returned a negative 13.9% return for all your troubles in work.
And so however, that's buying at the open and selling at the close. So holding it during the day, the trading day. Okay.
That's correct. Yep. But the second approach, which is the one I use, is buying the SPY at the close, holding it overnight, taking that overnight risk, selling it first thing at the open, using that approach every day since 1993, 634.2% positive return. Wow. So huge difference. But, as I tell people in my podcast and the live stream, this is volatile. I mean, if you could see an equity curve of this, it goes up, but there are huge ups and downs and drawdowns with this approach. But, so far it's worked pretty well. And I'm a big fan in trading of trading multiple time frames, having shorter profit targets, longer profit targets, some trend trades. And, this is as close as I get to day trading, but it's not day trading. I'm basically overnight trading, but it's fascinating, and it's the holding overnight. See, at the end of the day, you have a lot of day traders that are selling. They don't want to hold overnight. And so that selling pressure sometimes causes some downward pressure on the SPY. So you buy that, hold it overnight, take that risk in the morning. When the world hasn't ended, people start bidding that up again. And that's probably where the edge comes from using this approach.
Well, the world's changing so much to like a 24-hour trading day. I know it's kind of been that way for a long time. I remember being in Chicago, my roommate was trading the yen, and he was one of the first people I knew who had like a pager that had the yen overnight. He would watch like 24 hours a day. But I just think it's, that trade just illustrates something that I try to teach people when I'm talking to new traders online, which is essentially that the world of finance is such a big place. And if you can find any sort of edge that you can find out there, it can be, the difference for you to be to go into profitability from not being profitable. And I think that particular trade, which, you were able to, to just by having your eyes open and being engaged and being serious about this, you're able to find something that's been working for you. And, I try to teach people about going out and finding something that works for you yourself individually, because I think people get kind of overwhelmed sometimes. They'll see like, oh, I got to watch gold. I got to watch, oil's down. Well, what does that mean? I got to watch the bonds. I got to watch this stock and that stock. And they get sort of overwhelmed. And where the truth is, there's so many like little niches, and everybody just has to find their little spot in the world. It seems like, to be successful in this business.
I agree. There's a lot of different ways to trade. I mean, there's a million different ways to trade, but people always ask me, what's the best way? I'm like, I don't know what's the best way. The best way is the one that works best for you. I mean, if you don't like to get up in the morning, trading at the open is probably not going to be a good approach. You know what I mean? But it's very individualized. I mean, you like for me, end of day trading, I don't have to trade during the day. I can spend more time looking at charts and just getting ready to try to place that one good trade at the end of the day. I find that if I make day trades into intraday trades, I'm always kind of looking at them. I'm always kind of thinking them, and it takes my attention away for what my real trade is at the end of the day. But some people love day trading. Some people love intraday. They just don't want to hold overnight. But in my experience, the real edge in trading comes from holding overnight.
I'm curious. It sounds like you have a pretty good network of people that you're in contact with. What are you hearing right now about this whole virus thing and how long it's going to last, and and B, what are the traders that you're in contact with? What's their feeling on the market? Are they active? Are they bearish? What's been the word on the street from your people lately? And that's kind of a broad question. But,
no, it's a good question. The majority of people that I know in this business were waiting for a test of the previous bottom.
Yeah, I've heard that a lot too.
Yeah. I mean, I think statistically, when you have a big sell-off like we had, about 70% of the time you will go down and revisit that bottom. But this time it looks like it has, possibly, it may, but as right now it has not. So I think it's caught a lot of people, like almost everyone that I knew thought, no, I'll buy the next bottom or whatever. And I guess when everybody's thinking one way, sometimes it goes the other. But I would think most of the traders that I know are fairly bearish on their outlook, and they're surprised by this rally. But I think it's a good lesson to learn as far as a technical trader, is that it's not usually good to have an opinion. It's better just to trade the prices instead of having an opinion. Stephen Burns, who and who's a friend of mine, and he's done very, very well. My gosh, he's done very well because he's just a master of not having an opinion. Well, maybe he has one, but not getting in the way of his trading. So I've been really, really impressed with his results this year. But I would say more bearish, and who knows, the market just may go up and up and up, and these people will never get in because they had a preconceived notion that it was going to go down.
Yeah, it seems like a lot of people. Well, the thing I noticed personally was, like, a couple of weeks ago, I had this feeling in my head. I'll just wait until it goes down, and then I'll latch onto some. But then I thought, I stepped back from it, and I said, wait a sec. If I'm having this idea, maybe a lot of people are having this idea.
Yeah.
Because you could see it for a little while where it was like, just not that many days, but 3 or 4 days, it was like every rally got sold, right? It was like every time it rallied, it got sold. And you could see retail, like the light bulb going off in retail's heads, like, I'm going to sell the next rally. And that's when it stopped. That's when that stopped. And we started to rally. And yeah, it's so hard not to be bearish with all this bad news. You turn on TV. I mean, we aren't, I'm not working. My other job I was furloughed from. Everybody, you go out in the town and nobody's around, and so it's so hard to be to not be a little bit bearish on the market. But we have to realize that the markets are forward thinking, and be, like you just said, we never pretend to predict what the market's going to do. Why should we all of a sudden now start predicting what the market's going to do just because of this crisis? I mean. And so, it's hard not to have a bias, but everybody seems very negative on the market. And that wall of worry, we seem to be climbing it, at least at the moment. I mean, who knows? It could turn around at any time. What about the, I don't really follow oil very much, but I'm pretty shocked that it's so low right now. Do you have any insight in that at all? That whole oil situation? I think it got back to like $21 today or something.
Yeah, close. I've actually had a couple trades on oil. I don't usually trade it, but I have had a couple. I was fortunate enough to get a kind of that last move we had up. We've come down. I don't know. I mean, I think oil's just a reflection of really what the economy's doing. And right now we're just literally shut down. So there's just so much oil. I would have to think, but again, it's just my opinion, doesn't have to happen. But I mean, just my honest opinion is I would imagine that if and when things get back to normal, that, more oil will be consumed. They had that cut, which hasn't really done much, but I don't know. I don't know if it's a harbinger of things to come, this very, very low oil price, if it's a harbinger, but I'm sure the powers that be are trying any way possible to get the price of oil up. I mean, there are so many banks that have so many hundreds of billions of dollars of loans out to the oil companies. And if oil is too cheap, boy, they're really at risk of not getting those loans repaid back to them. So I think a lot of people have a lot of interest in the price of oil going up, especially the oil companies, obviously, and the financials. But as far as how to trade it, again, I just wait for a setup and take it, and it's going to win or it's going to lose.
So for somebody, most of my career was spent as a market maker, where the word coming down from upstairs from the people that controlled or who gave me the money to trade with was, you are going to stay delta neutral. You're not going to take a directional position if you're going to take a directional position, I want to know why. And so it was, trying to come up with a case to get long or short was never most of my focus. I was trying to quickly hedge any options trades I did, whatever. But for somebody who has never really been focused on direction and hasn't focused almost that very much at all on technical analysis, what would be the first things that you would teach somebody about technical analysis for someone who was highly skeptical of it? How could you make the case for it, just in broad terms to me?
Well, I think the first thing that would come to mind are, you can do very accurate, they're black and white back test on moving averages that back test phenomenally. I mean, crossover trades, when a faster moves over a slower moving average. But you can do a back test like on the indexes to the 250-day moving average or the 200-day moving average or the 1050 EMA crossover. But, I use ETFreplay.com. I think it's a good web-based back testing, but I think it's kind of undeniable. I mean, it doesn't mean it's going to work in the future, just like the overnight SPY trade. But if you look back historically, at how these long-term moving averages hold support, I think it's undeniable that at least up until now that they have been very profitable. But the main thing about technical analysis is that I think it's somewhat self-fulfilling. I think people say, ooh, its price is getting down to the 200, but it's not quite there yet, so I'm not going to buy till it gets there. And a lot of people will say, well, I'm not going to buy till it gets there, which makes it go down there. But I think the key in technical analysis is it gives you a benchmark. It gives you a line in the sand. I'm in if it's above this line. I'm out if it's below. It's not that there's anything magical about that particular moving average. Instead of a 200-day moving average, I could use the 271, and it would still work because it's giving you a line in the sand. If you're out, if the price goes below it, closes below it, you just get out for a small loss. If it stays above it and starts to trend, then you have a potential for a big win. And to me, that's what technical analysis is all about. It's finding out. I mean, I look at every indicator that I use, whether it's MACD or RSI or moving averages or ATR charts. I look at those as not lines on my screen, but I look at them as groups of buyers, right? I like groups of buyers, and you're going to improve your chances of having a profitable trade if you're in the company of as many other buyers as possible, right? Makes sense. You're not going to do so hot if you're in the company of tons of sellers, right? So you want to be in the company of other buyers. And so I look at indicators as potential groups of buyers to let me know, oh, this indicator is lining up, this indicator is lining up, and this indicator is lining up. I look at that as, oh, there's three groups of buyers coming together at a confluence or a combination at the same time. So I think that's helpful and gives you an edge. And then also your moving average or your RSI level or whatever you're using just gives you a very fixed position of, okay, if it's profitable, let that baby go. If it's not, just quickly get out. I don't even know how personally I would trade if I didn't have those lines in the sand,
So just to make it really simple for people, the first thing you were talking about was bringing up a stock, a chart of some sort of underlying a stock or something, and looking for a moving average, so like a 200-day moving average, or and bringing up a chart that shows you where that moving average is on the screen compared with the stock price now, and then you were looking for, well, if the stock gets down to that number, that line, then that's a spot where I should be buying it at that line. Is that what you're talking about? I just want to bring it in just the most basic terms for people that maybe have never looked at a chart before. Is that what you're talking about, that sort of thing?
Yeah. I mean, I think the reason why the moving averages themselves are important are that, one, people are keying off that moving average, and I like to buy as close to the moving average as possible, because if I buy up here and my stop is way down here, well, I have a huge potential loss. I like to buy as close as I can above the moving average, so that if it goes underneath again, I just get out with a quick loss, right? I just get out with a quick loss. But if I'm right, then I have the potential for it to move up and be possibly become a big trade. And moving averages above you act as resistance, moving average below you act as support. So yeah, and like I said, we're talking about the 200-day moving average. We could come up with a 325.5 moving average, and the principle would still apply, because it would just give you a level to stay in above, get out quickly below.
Now, as far as your own trading, are you focused mostly on teaching, or are you keeping active positions that you're trading always? And if so, what's the volume of trade that you're doing, as far as like sort of number of trades per day or per week, and sort of how long does your average kind of last? I just like to ask people that, just to kind of put you in a broad category of trader, sort of.
Yeah. Well, I trade more than I teach. And, like I said, I do that in the last hour of the day. And that whole last hour of the day, what I'm doing is basically looking for those confluences of signals, and finding some candidates, getting rid of them. And then at the end of the day, ideally, I feel best when I have 3 or 4 candidates and I can narrow it down to one. I like the idea of having one trade per day. And I also teach, it's very important not to, if you get 3 or 4 or 5 stocks that trigger all in the same day, I'm not going to take 3 or 4 or 5 all at the same time. It's just too much correlation. If the next day goes down, and then you get hammered. So in an ideal world, I like to take one trade per day. I don't like to have more than 2 positions in any one sector. I don't want to have, I'll never take 2 technology stocks in the same day, but I can have 2 technology stocks if I took them on separate days. And as far as how long that I hold them, I mean, I guess, it's technically I'm a swing trader, but I'm out very quickly if I'm wrong, maybe in a day, maybe in 2 days. If I'm right and they're profitable, I could hold them as long as maybe 7 days, 10 days, somewhere in that category. But the key, again, is getting out quickly with your losses and being able to let your profits run a little bit. I mean, I know it's cliche. I'm a big fan of phasing out of a position. I like to take profits, not on the whole position, but on a percentage as it moves up. Whenever somebody really wants some stock from me, I'm happy to sell it to them at a higher price. And there's some psychological reasons that I think it's important to phase out, because
sort of scale in and out of a trade.
Yeah, well, I don't usually scale in, but I always scale out.
Oh, that's interesting.
I always scale out, although there's nothing wrong with phasing in if that's part of your process.
Correct me if this is too personal of a question, but what, you said you sold a successful business. What did you do with the money? Did you invest it in real estate? Do you use it for your trading account? Well, I guess my question would be, is there a separate plan you have for money, like long-term savings from trading money? Because some people I talk to who trade, their trading account is all of their money. Other people, they have like a separate buy and hold account for their retirement or something, or they have money in bonds or real estate, that sort of thing.
Yeah.
Do you separate things out in these different categories personally?
Well, yes, in a way, because there's real estate things,
okay.
But generally I trade, most of my liquid capital I trade.
Okay.
I trade, yeah. And I said before that I'm a fan of having trading on multiple time frames. So I may take a trade on a weekly time frame, And instead of being in it for 7 or 10 days, I'm in it for 7 or 10 weeks, right? Whereas when I'm trading on the daily, I might get out quickly one day, or a good long trade on a daily chart is 5, 7, 10 days as well. So I think it's important to, you don't want to buy too many technology stocks. You don't want too much correlation, but I think the same goes for your trading approaches and your trading systems, to vary them up, some shorter term, some longer term. But I don't have this is a longer term and this is a shorter term account. I have an account that has shorter term and longer term trades in the same account.
Okay. Yeah. Do you find that your P&L is it very volatile? Because for me, for example, my P&L has been very volatile. Like I've made millions of dollars as a trader, but it doesn't come in a regular basis at all.
Sure.
I'll have I'm feast or famine things.
Sure.
It's very volatile. Do you find that yours is similar to in that way, or is it or have things been working kind of in a steady manner for you?
I'm a pretty conservative trader. I'm very aware and focus a lot on position size, especially in relationship to volatility, increases or decreases in volatility.
Okay, so there's a bunch of cool ways.
If I think over the last 3-4 years, excluding this year with, what's happened in the last few months, but no, my drawdowns are pretty small, but again, it's because I take quick losses. And that's what keeps your drawdown small. I mean, big drawdowns happen when you have too large a position size and you're on the wrong side of the moving average. Essentially, we want to be on the right side of the moving average, not the wrong side of the moving average. But this year when the volatility came in, I got hit there 3-4 weeks ago. Which was, I was like, oh boy, that hasn't happened for a while. You know what I mean? So, it was definitely a different feeling, and it kind of makes you have respect for the market again, because, the market had just been going up. It just seemed like, oh yeah, you just go through the motions and this is what you do. But I think we're in a different world now. I think we have to have respect for volatility. I mean, of course you understand volatility because, you deal with the VIX.
Yeah. So you do deal a little bit with options trading as well as stocks. Is that true?
Yeah. Yes.
And I know we had a conversation a couple weeks ago where you were talking about some sort of strategies to play this particular move. Are you focused, like, I know it's almost impossible not to be focused a little bit on like what's happened in the last month and how to play this as like a bigger move.
Yeah.
And I know you'd mentioned something about like maybe selling out of the money puts or selling puts. Are you involved in that sort of strategies right now?
Yeah.
Yeah. Okay.
Yeah.
Do you want to talk about that for a second?
Sure. Yeah, sure. Just a few minutes ago, I said, it's important to trade different systems, different approaches, different time frames. But that's why I like working with options as well. Just try to get, the overnight SPY trade's a quick overnight trade. A daily directional trade's 2, 3, 4, 5, 6, 7 days. A weekly directional trade's 2, 3, 4, 5, 6, 7, 8 weeks. But the SPY and the daily and the weekly, they're still all equities. And so I like to sell premium. I like to sell options, especially on really good companies that have strong balance sheets that recently with the volatility we've had, when volatility goes up, the premiums go up so high. So I was fortunate enough to, be able to sell cash secured puts on companies like Apple and Disney, way down, ridiculous prices that I would be very happy to buy them at. But if they don't get down there, of course, if you're the seller of the put, if they don't get down there by the expiration date, you get to keep the premium. But the premium was working out to be, like 8, 9, 10% per annum just on the premium alone. So that's why I found that attractive. And then, because of what's going on here with the health, with the virus and all this, I think I was telling you last time that looking ahead, I think we're going to be fine. We just have to have time on our side to get through this, maybe get a vaccine or a therapeutic. And so companies like Apple and MasterCard, when they were very, very low, I was like, look, these companies are well capitalized. They're going to make it through this, but we need time. So yeah, I don't usually do a lot of call buying, but I did buy long-term calls out to 2021 and 2022 on some of the best companies in the world that, and having a defined risk, buying the calls and having a defined risk. So that was my strategy. And it's worked out well so far.
Now, as far as the overnight spy trade,
yep.
Did you put that on hold when all this stuff happened? Because I would not, to be honest with you, I personally would not have the self-discipline to not put that on hold. I mean, no matter what I said, like, oh, well, yeah, I'm going to follow this through because I know you got to hold on to it through thick and thin. I wouldn't be able to do it. I just know myself. I couldn't keep doing it. As soon as this started to go down, I would be like, dude, we're going to have multiple down days. I know it. I'm not doing this. I would have bailed. So if you could hold on to that, you're a stronger, self-willed person.
Well, I feel shameful at this moment because there was one day that I went, nope, I'm not doing it. And I only missed one day. Liz Ann Saunders from Bespoke Invest on Twitter, she'll probably never talk to me again because I was her number one fan. But one day I was like, you know what? This is ridiculous. I'm gonna pass on this on the one day. I can't remember if I would have made money or not on that particular day. I
can't believe you did it that many days though in a row, because it's just like, I know myself that well enough that I can't stick to something like that. I just can't. It's like,
yeah, you could though if it was one share.
Right. Yeah.
And that, I mean, there's a lesson to be learned there. You have
sizing.
Position sizing. I'll tell you what, before this volatility happened, the maximum I would ever use on an overnight SPY trade was 10% of my capital. That's the maximum I ever use on any trade. Then when we closed under the 200-day and volatility picked up, I went from a 10% position size down to a 2.5% position size. One, because we were under the 200-day, and two, because the volatility had doubled, tripled, quadrupled. I probably should have gone down to a 0.1% position size, but I kept it at 2.5. But yeah, I wish I would have not skipped that one particular day. It's like having a perfect record in school, except for you were sick for one day. But I kept reducing my position size, and that's what kept me in the game in the last 2.5, 3 weeks. It's done very well. But I can imagine a lot of people who were using the overnight SPY trade just gave up and quit, probably because their position size was too high. But it's very key in any kind of trading is
you got to keep it going, because that's how like the SPY beats all the money managers, because
that's right.
People don't bail. People bail at the worst time if you leave it up to people's decision making. And if you're going to commit to something like that, you got to stick with it. That's why I don't do that trade, because I know I couldn't commit to it. Maybe I could small, like you said, but yeah, I think that there's something to be said even for, what about just the strategy of your first year as a trader, just put your money in the SPY and just leave it there, because it seems like people just chop themselves up so badly. It seems like when they're first learning to trade, it's crazy.
Yeah, I think when people are first learning to trade, including myself, when I first took a whack at it, you just thought you were going to make all this money and have this huge returns, and a lot of the advertisements out there were, I made 462% in the last 2 minutes, you're like, wow. But when you come back down to reality and you learn that being able to make 10 or 12 or 15 or 18% a year is really good. And, I sometimes have some people that come to me for lessons and they're like, I have 10 grand. can I turn it into 100 grand by the end of the year? And I'm like, you can, but not with me, because that's not how I teach you. To do that, you're going to have to take such huge risks that So
go to the casino. Yeah.
Yeah, well, sure, exactly. So
I have the same thing. I have people come to me and say, "Oh, well, I heard about this guy. He had 10 grand and he made it into 100 grand this year. You must." I'm like, "Well, that's not really." I believe you, but if you think you can give me your money, and I'm going to do that for your money, then you better just keep it, because that's not the way it works. For every one person that happens to, there's 10 people that are losing money, obviously. But we're up against a lot as educators in this field, because there are so many people that prey on the naive new young people, and they show them what they want to see. The Ferraris and the
I know.
Trade 10 minutes a day and pump iron by the pool and all that stuff.
Sure. You got the ladies coming by and beach volleyball while your Ferrari's getting waxed.
Right.
Yeah, no, I know. I mean, I see those ads on YouTube, and I'm like, do people really do this? I mean, do they really buy into this? And I guess they do, but it's not reality. I mean, the best money managers on Wall Street, if they made 18% a year, they would, they'd be in the top.
I like to say, like, a good Wall Street trader, if they have a really good year, they might make 40% on a really good year. And of course, there's people that do really well at times. There's people that have that hit a home run here and there, certainly. And it's happened to all of us in our career at some point. But it's base hits and what they say, singles and base hits, get on base and keep it moving is what you're looking for, really. And it's hard though, because especially I think for people that are starting with a very small amount of money, like if you're just starting with like $1 or $2 grand, there's that feeling like, I just want to put it on the black or the red on the roulette wheel and see if I can double it. And I get that, but that's not taking it this seriously as being something that's going to be a consistent source of income for you, if you look at it that way.
Oh, 100%. And listen, if you come into the market with $1,000, it's easier to double it or triple it than if you have $1 million, because if you lose it, it's not life changing.
Right.
Whereas if you have a large amount of capital that you lose, it is life changing. But, for anyone out there that's starting to learn to trade, I would recommend that even if they're starting with $1,000, they treat that $1,000 like it is their life savings and have respect for it and get in the habit of trading your plan properly, getting out quickly. In that scenario, the difference might be a $60 loss compared to a $65 loss, but still go ahead, stick with the $60 loss. And because it's all about habit, having good trading habits and a good trading approach. And the more you follow your rules, regardless of the dollar amount that you're trading, the better you're going to do in trading. You have to follow rules. I mean, I say this a lot on YouTube, but you are going to have regret whether you follow your rules or whether you don't follow your rules. If you see a trade and it's not really, it doesn't check off all the requirements of your trade, and then you take the trade and then it goes against you, you have regret going, I should have stuck with my rules, right? And then you have trades where maybe 2 things happened, but you were looking for 4, and so you decided to pass on the trade, and then it went rocketing up, and you're like, oh, why didn't I take now? Then you have the regret of following the rules. That happened to me yesterday. We had 3 people in the podcast, and they said, what do you think about Roku? And I said, yeah, it's good. I like it. It had a crossover. I had a 520 crossover. And but the 50-day moving average was pretty close above it, and I didn't like the risk to reward. And I always have requirement that, I have to have a decent risk to reward, at least 2 to 1 to the upside. And so they all took it. I didn't take it because I was following my rules, and literally market closed a minute later, it's up 10%. I'm like, but there's the regret of following the rules, but in the long run, following the rules will get you the money following the rules. But in the short run, it's frustrating.
Well, I think that, you certainly demonstrate this, and I try to as well, to just show people that are new out there that get frustrated when things don't go their way. That is just part of this business. And I think that so many people with these YouTube channels and stuff try to pretend like they never lose money and paint this picture that they're like a genius, and that you're going to get to this level at some point. You're just going to get it, and you'll know what's going to happen ahead of time, and it will be just easy street from there on out. And I don't know why they try to paint that picture for people and why people believe them, but a lot of people kind of believe that like, oh, well, I follow this guy and he makes money on every trade and blah, blah, blah. And I think it's just this fake reality that people try to, I think it's just like kind of hucksters try to paint it for people. But I try to show people that, no, it's hard. It's hard out there. You're going to make, you can make a good trade and still lose money all the time, and stuff. Yeah. Stuff isn't going to always go your way. And I think that's comforting to people to hear that from, successful traders that we get frustrated too, Very at times.
100%. Nobody has a crystal. I mean, look at Ray Dalio. He's down 20% this year. Arguably one of the best traders in the world. And he's down. So I don't care if somebody's had 60 years experience in this business. They still don't know what's going to happen tomorrow. Right. Most traders lose more than they win, always. And, if somebody never lost, well, they'd own the entire world if they never lost trades. So it's that pretty soon they would just own the entire world. It's trading and making money in trading. It's just like a casino. Casinos don't win every throw of the dice or roll of the roulette ball or every deal of blackjack. They win about 52% of the time, but you don't see a casino after somebody beats them in 10 hands of blackjack in the row going, oh, that's it. We're shutting down the casino. We can't handle this heat anymore. And you just have to realize is if you do have an edge, you are going to go through drawdowns, But yeah, people that never say they take losses. I mean, come to my channel, you'll see me take losses all the time.
So what's the plan for you with YouTube? Or would you like to have 100,000 people tuning in every afternoon? Would you like it to be, would you like CNBC to hire you and you be a CNBC host? What would you envision being like a positive outcome for YouTube right now? How long have you had the daily show on? It's 5 days a week, right? Something like that.
It's 5 days a week. About a year and 4 months I've had it.
Okay. I have a friend who was doing that for probably 2 or 3 times as long as you were doing it, and he got so burnt. I mean, he does it. He was doing it at night for like 3 or 4 hours a night, and he just got really burnt. Would you envision sort of expanding your coverage from what you're doing now, or I don't know, what would be a positive outcome for your show? Because for me, like if somebody asked me that, I would say, look, I want to be a YouTuber. I would love to have to have a successful channel that, I'd love to be PewDiePie or whoever, have 10 million followers and all that kind of stuff. The YouTube thing is attractive to me. Is that something that you're sort of interested in as well?
Well, I'll tell you, when I started the channel, I thought, okay, I'll be able to help people with trading. I'll be able to show them some good principles, because I wish I would have had somebody show me that when I first started out. It would have saved a lot of money. But what happened is after I started doing the channel, I started to meet people from the channel, got to know them pretty well because they're there every day. I like that portion of it, but probably the unintended consequence of the channel to me was it makes me trade better.
Yeah. because you feel like you have to be responsible to those around you.
I need to show a good example.
Right.
It sucks to lose lots of money in front of a lot of people.
I feel that. Yeah. Yep.
So it definitely made me a better trader. And I didn't see that happening. But as far as going forward, I mean, the channel's growing, although, geez, if I had 10,000 subscribers, if I had 1,000 people in the chat, I think in a way it would be kind of a bummer because, I like to comment on everybody's comment, ask their questions, but you know how those channels are that have the thousands of people. The chat, everybody be chatting, but I wouldn't be able to comment on it. So I guess that's a little bit of a concern, but going forward, I like the channel because, I think it's beneficial because I think it helps people. It helps me be a better trader because I can't go off the reservation. I can't, do anything crazy because I'm trying to set a good example. And another benefit of it too is, with my private lessons is literally becoming friends with my students because I spend so much time. I spend 15 hours each with each student, and then they're just friends after that. But going forward, I would possibly maybe 2 or 3 times a year, maybe do a in-person training with 5 or 6 or 10 people, something like that. That sounds kind of appealing. But I honestly think one-on-one is the best way to learn with a teacher, because a lot of times you're in conferences or meetings and people are scared to raise their hand and ask a question because they don't want to seem dumb or whatever. But I don't know. I like it how it is right now. So
yeah, it really gets overwhelming pretty quickly with people. I mean, for me, I've met so many people in the last 2 years, and I can't even imagine what it's like to be like, a famous person or something. But it's so hard to even just keep up with the people I've met. And I think they said something like the average human being, you can maintain, I think, up to something like 200 friendships at a time, and beyond that, it's just impossible. And but the most rewarding thing is just all the people you get to meet, though. I mean, it's isn't it amazing, like just meeting all these new people all the time? It's fun, huh? I think it's really cool.
It's great. I mean, from all over the world, and I've been fortunate. I don't know about you, but like we haven't had any trolls. We have some serious people that have good comments and good observations, and they're friendly and they have good manners. And I hope that keeps up.
Nice.
We have 2 guys that write poems, trading poems, every single day. Have you seen these?
I think I saw one of them. Yeah.
These guys write trading poems every day. Every day. It's so pertinent to whatever the market's doing, they'll write a poem about. I'm just amazed. It would take me a year and a half to write 2 lines of poem, where these guys just bust it out. I think one of them's a writer for like Billboard magazine or something, but man, what a skill. But what about you? Where do you see your channel going? What would you like to see it be?
I don't know. I enjoy, my favorite part about it is just interacting with people on the chat. I think that's such a cool thing to be able to just, you're in the middle of talking. It's like you're in the middle of a YouTube video, and then someone comes up with a question. You're like, okay, hold everything, and you can go and address that individual's question. I think that's just a really amazing thing that technology has given us. Imagine if you could like interact directly with like David Letterman on the David Letterman show and just ask him a question. That forum's too big to do that. But for us, it's having that chat that you can interact directly with people in is the most exciting thing to me. I just think it's just a really fun thing.
Would you like to have 1 million subscribers?
I mean, sometimes I think it would be fun. It's a lot of work, though. YouTube is a ton of work. Making good videos takes so much time, and those people that have the big channels, I mean, you got to spend 10 hours a day editing sometimes, it seems like,
Yeah.
It's definitely, yes. I mean, obviously, once you get better at it, you can hire people to help you, but at first, to get a channel going is a lot of work. And I have so much fun doing, like, the the videos about exactly what's happening on this trading day, as opposed to making like universal stuff. And the videos you make just for what's happening today, they have no value tomorrow.
Staying power.
Yeah. So
I agree. But you share good content. You have a nice niche, which is with volatility products like the VIX. And I mean, that's what attracted me to your channel was, I know enough about the VIX, but I don't know as much as I thought I did when I came to your channel and learned about all the, the contango and the backwardization and all the different approaches that you use. I mean, I think it's great that you have that niche, because that VIX is, that's a strange animal,
Yeah, I got into it because just the advent of all these ETFs with like leveraged ETFs, I became fascinated with those, and I became fascinated with the fact that like those triple leveraged ETFs, they decay. So if you're trading TQQQs or any of those ones, it doesn't have 3 times leverage to the upside. It has like 2.8 times leverage to the upside and 3.2 leverage to the downside or something like that.
Oh.
So they all decay a little bit, and I was trying to figure out how to capitalize on that, and that led me to the VIX, which, as you said, has such a unique term structure and just has unique variables to it. So it's something that is interesting, and I found myself trying to explain to people one at a time over StockTwits, which at the time only had 140 characters per message, and it's very difficult to describe complicated topics. So I started making videos just so I could say, okay, just watch this video, so I don't have to go through it again. And so that's kind of where I came to it from. But it's exciting. It's very strange having people who having fans is a very strange thing, because the people I know in my regular life aren't interested in my YouTube channel at all. Like my family and friends have other interests, but it's interesting to have people that are really just focused on what you're doing. It's very fun.
Yeah, isn't that the case? I mean, I have a lot of people, on my channel that, it would be great to meet them. They would be excited to meet me, I'm sure, and I'd be excited to meet them. But, people that I know could care less. What do you stock? What is that, gambling? You don't know what you're doing. I'm like, yeah, I do know what I've been doing. I've been doing it for 24 years, but they have no clue. I guess if they watched, then they'd kind of start to understand. But yeah, it's a strange thing with the exposure on YouTube. And in this world, I mean, I don't know about other channels and topics, news related things or health channels or whatever, but I think in the stock world with money on the line, people are pretty interested in these kind of channels.
Yeah. Cool. Well, I guess we got to wrap it up, but it's interesting to just explore stuff with you. I like to expose people to different traders, and everybody's different. There's
sure
you could ask the two of us. You could put 10 traders in a room and ask them about a topic, and they'd all have a different viewpoint.
100%.
It's just the way it is, and you and I obviously have a little bit different styles. Although I think if you lined us up next to each other, we probably more similar than you think in the way we look at things in the end. But because I think that people translate market movement, they see it through a different lens. Like you might something that you're describing through your analysis of the charts and movement that way, I might see through just time and sales and watching stuff move, because I'm a big fan of just watching the tape and watching the bid offer just move. And I have this theory that a lot of people will see momentum or see different things, and they'll be describing the same thing in different ways. And I think that's probably the case.
I agree. I think in the end, whether you're watching the tape, and I think it shows up either in volume or I think it shows up in the price action. So yeah, I think I've never heard that put that way, but I think it's an excellent way. I mean, people that are tape readers compared to technical traders, I'll bet they're closer than they think.
Yeah.
On what they're
I'm a
looking.
big fan of like momentum, and I can feel, I stood in a trading pit and just watched the ticker and watched the bid offer for like 10 years straight, 10 hours a day, and I can feel it, and but even though I'm not a huge proponent of technical analysis, I certainly know by heart, I can look in my mind and see exactly the charts of anything I trade. I know it backwards and forwards, and I can tell you.
100%.
So
100%.
It's an illusion if you think that like just because people don't talk about technical analysis, you have to know your products. No matter what your style is, you need to know your products well, and that's a lesson for anybody who's thinking about trading. It's a tough game, and you're competing against the best in the world. So take it seriously, know your products, right?
Hey, quick question. So Larry Williams is a guy I studied with a long time ago, and he told a story of a guy on there was a big bond trader on in Chicago, and his trading methodology. And because you were on the floor, maybe you can give me some insight to this, but his trading methodology was he would go there, he might just throw a contract on for fun, but his indicator for buying was the volume. There was when it got to a certain volume pitch, decibel level or whatever that he calibrated in his head, that was his signal. He'd throw on a couple thousand contracts and I don't know, maybe make 4, 5, 6 ticks or something like that. But does that resonate at all with you?
Yeah, it sounds a lot like the Merc. There's 3 major pits in Chicago. There's the CBOT, the CBO, and the Merc. And the Merc is where the euro dollar is and where the S&P 500 futures used to trade. And it just starts to roar at times. And when you're standing on the floor, stuff just starts happening, and you don't know what it is. And you're like, something just happened in the world. What happened in the world? Something just happened in the world. We don't know what it is. And usually the pits will start exploding before the news comes out. And then all of a sudden, and then all of a sudden, oh, Libya did this or whatever. But it's amazing how the markets lead everything. And
the pits explode before the news came out?
Yeah, because some insider gets the news for, the wired people upstairs get the news first.
Wow.
So it's like, and I think, the market always leads everything. And I think that this market is going to lead the recovery, and it has so far. We'll see if we go. I'm sure we're going to have down days coming again, but it seems like we're off the highest of the spike in volatility, at least. I can't imagine what event's going to happen that's going to make a spike higher than that right now, It's hard.
Yes. Well, that's been an epic move in the VIX for sure.
In a crazy marketplace. Well, I'm glad you've survived. I think, anybody who's out there listening now, if you've survived this last month, pat yourself on the back. That the key was to stay in business this month. There'll be good trading days ahead, but if you've stayed in business this last couple weeks, I think you need to pat yourself on the back, and those great setups are coming again soon, I think.
Yeah, they come around, but we've been in capital preservation mode more than capital appreciation mode.
Well, I'm glad to hear you put on some good trades, though. It sounds like in the heat of things here. And best of luck to you moving forward. And
thanks, Dave. Appreciate it.
Let's stay in touch. I enjoy speaking to you, and I like checking out your channel. So,
great.
I want to have you come back on. I want to have you come on sometime and do the live thing too. That would be fun. Answer some questions with me. That would be good.
Oh, that'd be good. Yep. And I want to interview you as well. Cool.
Well, Greg, nice to. I'm going to leave information for Gregg Gossett Trading, and do you have a website that I can put in the description?
I just have YouTube, Gossett Trading and Mentoring on YouTube. That's it. You can just put in Gregg Gossett, but that's the only place I'm at.
All right. So links in the description for Gregg Gossett Trading, and if you don't have to watch him every day, but what you do have to do is go over there and click the subscribe button and leave a comment on his video. If everybody who's watching now does that, then we'll be good, right?
That'd be great. Oh, and I do have Twitter, I guess. Gossett Trading @Gossett Trading on Twitter.
Nice. Awesome. Well, I know it's, I appreciate your time, and thank you folks for watching, and we'll see you next time. Best of luck to everybody.
Thanks for having me, Dave.
All right, cool.
U.S. government required disclaimer. Stock, options, futures, and Forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.